Business owners, your profits are not your personal income. So I recently put a post out on my Facebook profile and I said, business owners, your profits are not your personal income. And it was an interesting experience. There were many entrepreneurs who came going, yep, fully agree. There was at least two people, one who got so triggered, chose to unfollow me, and another guy who said he understood where I was coming from, but then proceeded to judge me and my professional, how my social media labels me as a marketer. Anyways, I don't want to go into that, but I do want to talk about this specific topic of, as a business owner, your profits are not your personal income. And I'm not talking about from a technical standpoint. Let's get this clear. One of the guys on the social post. Let's get this clear. In Australia, if you are a sole trader entity, you're right. If you've signed up, got your ABN, and you're a sole trader entity in Australia, then yeah, your business profits are your personal income as far as the tax office is concerned. I'm not arguing that technically from an accounting or taxation purpose that it may be your personal income. What I'm talking about here is if you go into business thinking that the profit you make in your business is your personal money to spend and do with what you choose to, you're setting yourself up for failure. Here's what I recommend you do instead. Now, this is not personal advice. Go and talk to an accountant and make sure you see if this is the right strategy for you and your entire situation. However, here's what I've done and have been doing for at least 15 of the 20 years that I've been in business. And it hasn't steered me wrong, and yet I've watched many others in business go with different approaches and struggle to produce wealth in their business. So what is it that I do? Well, the first thing that I do is I've chosen to set myself up in all my businesses as a company structure. I'm not going through a sole trader approach, and I've chosen to be it as a company. Now, that's a conversation for you to have an accountant. I'm not going to argue why you should or shouldn't do that. But personally, if you're serious about building a business and an asset that you could one day sell, I believe having a company, an actual entity that people can buy shares in, you or others, that is setting yourself up and sending a message to yourself, to the universe, and to partners who might want to work with you that you're serious about building a true business with value. The second thing that you do, or what I've done, is I pay myself a salary. I employ myself as the employee that I am. I pay myself a set amount every single week. Now, ever since I got my very first job at 15 years old, I was paid weekly. So when I started paying myself in my business, I paid myself weekly. There's a couple of reasons that I think paying yourself weekly is really important. Firstly, it puts the pressure on you to ensure that there's enough money to pay you. Because when you just go, oh, well, if there's profits, I'll take the profits, it doesn't put that same level of pressure on you to perform and ensure the business can afford to pay for its most vital employee, especially in the beginning, which is you. If your business is just to be a hobby, then that's a different story. But if you're serious about, I'm building a business that will build wealth, but first and foremost, provide a lifestyle and a living for me, then you want to ensure that you're paying yourself as an employee and treating yourself. Now, when you start paying yourself a regular amount, now, again, talk to your accountant about the best way to do that structurally. I'm not giving you taxation advice here. One saying I will make point of is paying tax is not necessarily a bad thing. If you're paying tax, it means you are making money. That's just a little aside, but talk to your accountant for the best advice for you. Pay yourself as an employee. Then ensure that there are profits retained in the company. If for example, you have a business and you make 10 grand profit this month and you decide to go, great, I'm killing it. This is amazing. I'm going to take that 10 grand and I'm going to go spend big. I'm going to go on a big holiday. I'm going to buy a jet ski. I'm going to do whatever it is you might want to do. And then what if the next month you have some big bills that you hadn't thought about, or you need to now employ someone or invest in some ads and marketing, and you've got no cash left because you've gone and taken it out of the business to use. And so then you're in a position of going, oh, I need to put money back in the business, and it doesn't feel that good. So you want the business to be able to afford to pay you on a regular basis, a key consistent amount, along with any other team members you might employ, but you are getting a fixed amount. It could start off small. When I first started employing myself, I was paying myself $100 a week. I pay myself significantly more than that now, but we're talking about 15 years ago. But the very first time when I finally was like, enough is enough, I've run these businesses not making me any money. I ran businesses for 5 years and didn't pay myself a cent. Just kept reinvesting back in the business, but really I was just having fun and learning and not making any money. And so finally, when enough was enough, I was like, all right, it has to be able to afford at least $100 a week. I started paying myself $100 a week. And then slowly but surely gave myself pay rises and get myself to a point where you're actually earning a market rate for what you're worth. Then you want to ensure the business is profitable, because break even, in my opinion, is not when you're at zero net profit. Break even is when you're at least making 5%, because that 5% is a buffer that you need to ensure that you've got padding to support the business. And then over that, you want to have some money that you can reinvest back into the company to grow, to improve, to take some risks, because not everything you do in business will turn out. I've spent a lot of money on activities and strategies that haven't given me a return. You need that buffer to do that. And then finally, you also want there to be some money that if there's enough after you've retained in the business to help it grow, there's still some left over that won't put the business in any risk if you chose to take it out. At that point, you can take a dividend as a shareholder. And other shareholders, other investors who might have invested with you, can also receive a dividend. And so what is a dividend? It's a payout for the shareholders. It's a share of the profits. But it's not 100%. It's not that 10 grand. It might only be 2 of that 10 grand is available as a dividend. And the other 8,000 was reinvested back in the business. But you also know that you're not living on that 10 grand because you were getting a salary. You were getting a regular paycheck, giving you stability and security in your business, and you know your business can afford it. So when I say that business owners, your profit is not your personal income, I mean it. If you think that your profit is your personal income, it's going to limit your ability to grow as a business owner. Your profit is your personal income when you're taking a dividend, and you can use that however you choose. But if you think that every cent is something that you can just go and buy and spend, I assure you it is going to limit you. Now, as I've already said numerous times in this episode, I'm not an accountant. Obviously, you need to seek your own advice from a taxation point of view. I'm talking about from a mindset point of view. So, some action steps for you to take from here. Look at your business. Look at your situation. Are you giving yourself a regular paycheck? However that may be structured tax-wise. Are you giving yourself a regular amount every week, or at least every 2 weeks, or at worst case every month, so that you've got money to live on and the business can afford to do that? Secondly, are you ensuring that any profits you make, that some of it is being retained in the company or the business to help it grow, is being reinvested in to create growth? And then thirdly, if and only if there's viable amount, and maybe you already have that, have you set up some sort of dividend structure? Have you set up like every quarter? Will you do a dividend distribution? Is it only every year? Will do it every month? What is going to be your dividend distribution frequency, where you evaluate, can the business afford to pay a dividend? If it can, how much will you give? Some things to think about. Keep up the journey. You've been listening to Entrepreneurs Rising. Thank you, dear listener, for tuning in. I appreciate your time and look forward to connecting in future episodes. If you would like show notes or any resources from today's episode, you can find them at rising.show. Rising.show. You can find show notes for this episode and all other episodes, as well as links to socials and the ability to reach out and connect with me, make your suggestions for future episodes. Until next time, keep up the journey.